Hello guys, this is my first video on YouTube and today is my first day of doing 21 day challenge, analyzing and backtesting the Forex market plus gold. So what I'll go through today is it's actually a weekly analysis and trades that I've actually taken recently. So we'll see guys how it goes. This is my first video. Obviously it's gonna be shitty, so without further ado, let's get back to the actual video. Hello guys, let's start the video of analyzing my weekly, showing my weekly. Let me show you my weekly analysis. So, so what we are going to do here is learning and seeing where I made a mistake and try not to make these sort of mistakes again. All right. Today I hit one, not I don't know, one to two else from gold and other commodities. So all right, why I lost this trade? Let's figure that out. Our daily time frame on our daily time frame is everything is 100% bullish. Mm, yeah, not I would, not I don't think so because there is actually a little market shift here. There's a market shift and break of structure right around here. So this is our for our swing. On our for our time frame, we actually line out our swing range from the bottom and the top of the big move. All right. So find out breakout structure, market shift, and plus sort of liquidity sweep. I'm gonna do a dollar sign, right? Okay. So what do we have here? So actually, this is unmitigated demand zone, and this liquidity candle actually led to buyers to get into this market, and this demand zone actually also led buyers to get into the market and cause this a really big bullish move. So I'm gonna delete them for a while. And there's our actually our unmitigated demand zone, as I said, and around here to unmitigated demand zone. So we are waiting the price to get here and mitigate those respective demand zones and hit back up because The reason why actually there is our two mitigated demand zones, so there's a very likelihood of the third and the fourth demand zones to get mitigated and respected. Therefore, we have to wait the candlestick to get here or our extremes on here, or if the price won't respect 12 days 12-hour key levels, it actually comes down and sweep all the liquidity available here and yeah, here, and the price will actually spike right back up and right goes through this our swing range, because there's also liquidity above these two highs, because double tops are inducement traps that most buyers see. When most traders see these double tops, they always get into the trade for buy or sell depending on support and resistance levels. So we're not retail traders. So what we are going to do, we are going to trade like pro traders, professionals, because smart money enters right after sweeping these two highs and leading most retail traders to stop out. So yeah, we gotta take advantage of that on our time 4 hour time frame. And let's figure it out why I actually made a mistake of losing the trade. Why I lost the trade. I actually thought this is actually this is my liquid. This is the liquidity sweep that I was looking for throughout the day, and it wasn't in fact, because when price came here, I thought it was a market shift. It ain't a market shift. It's just a liquidity sweep. It's not even a liquidity sweep. It is actually pullback, because price we see the price is pulling back to the demand zone, because we have two double demand zones respected, and we're expecting the next two of these levels to get respected. So big hedge funds manipulated the market to the upside, and when there is no more buyers, sellers get into the market and push the price down, creating this pullback reaction. So I didn't actually see the trend. I didn't see this trend as a pullback, but I saw it as a pullback, but I entered maybe there early. I forced the market, therefore I lost the trade. So don't make this sort of mistakes forcing the market. So wait, first wait for the price to come to your 4 hour key levels, supply, demand, order block, and plan. And when the price comes down to your order block, what do? You actually go to a lower time frame and see what is actually happening and identify your perfect entry. All right. So I'll get into how I trade in other pairs. There's a bunch of pairs left. So overall, the trend, my weekly analysis would be prices will spike up right after getting respected from two of these key levels or after a liquidity sweep because Fed actually show Feds are showing um, to cut down the interest rate, which leads to the US dollar to go down. So gold actually spike up. It shows it takes time though. It takes time. Doesn't happen overnight, but it takes time. All right. Let's move to the Euro USD. What is happening here is I also lost this trade. The reason why the same mistake, same freaking mistake because I entered at a wrong time by forcing the market and feeling sort of FOMO because I thought I'm missing the opportunity, so I felt like I had to getting to take this trade as soon as possible, and I took it. I lost it, getting liquidated. And I remember the one quote: "If you cannot identify liquidity, you are the liquidity." Sweet. So let's analyze our weekly time frame, weekly analysis. Let's see our weekly analysis. Our daily swing is here. On our daily swing, we are seeing a really good pullback. All right, really good pullback. So we are waiting the price comes down and spike up. Price actually came here, I think. No, we are waiting the price come here and respecting this level and go up on our daily time frame, which it takes a lot of time, maybe a month or two, on our 4 hour time frame. What we have here on our swing range, we are bearish. We are absolutely bearish, but our higher time frame we are bullish, so we are looking for buying opportunities, all right? And I marked out our demand zones, demand, and supply zones, and one supply zone that got respected. Our 4 hour time frame. On the 1 hour time frame, what do we have here is I entered wrong. I should have looked for buys, but I entered. So that's crazy. I was aggressive. That was an aggressive move, therefore I stopped out really fast. And yeah, we got our breakout structures here. And so to prove it's actually a bearish bearish scenario on a lower time frame. We are creating lower highs that didn't surpass our previous highs, therefore showing sort of like a bearish momentum, bearish structure. So to really see if it's bearish, we gotta see the price go down, creating this really good market share or liquidity sweep. I'm just gonna put it like a dollar sign, which means liquidity sweep. So if both happens, uh, well, what happened? What we see, if you ask what we see, liquidity sweep happens, we see loss of momentum and doji candles pending one by one. That means liquidity sweeps sweeping these highs and getting respected from this demand zone we have here. All right, and going right back up. Or if we didn't see any signs of liquidity sweep, the price just blasts through it, it's actually a market shift because they didn't show us any signs of liquidity sweep, as I mentioned, and we are going to wait the price to go either way, either of our supply zone, supply zone to get hit and start continuing the trend, continuing the downward trend, and coming right around here. Yeah, here this is our extreme demand zone and plus strong demand zone, extreme demand zone and strong, what? Yeah, strong demand zone where price don't have any evidence of going blessed through it. Maybe, but not much. When the price comes here, it will actually respect this demand zone and go back to the upside. So yep, what we do here is waiting. And as always, when the price comes to our demand zone or either demand or supply key levels or the block breaker block and any of them, we go back to the lower time frame, either 15 minutes or 5-minute time frame, and we look for our perfect and snapper entry. From now on, I'll promise I'm not gonna enter trades without any confirmation and forcing trades because it's actually bad. I tested out many times until now, so I saw many of my trades lost because of this stupid mistakes. So I'm not gonna do it from now on, 100%. I actually understand my mistake now. So what about GBP JPY? What is going on here? Let's go up to our daily time frame and see what is going on actually on the market space in 2024, 2023, which actually gives us a really good scope of understanding how the price is going. Is it appreciating or depreciating? I mean, inflating or deflating. What the heck? Or anyway, you get the point. All right, I think so. So it showed us a really strong bullish momentum structure, and we have really good, great, I mean, really strong bullish structure. So yep, bullish, 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 bullish. We haven't taken any lower lows, only lower highs, lower highs, lower highs, lower highs, lower highs, higher high, sort of like a pullback, but I haven't seen any lower low except for this liquidity sweep because it showed us a V-shaped reaction right after. And like I said, when we encounter any sort of like any sort of liquidity sweep, we saw a little doji candles and really big candle or big candle that has really long wicks. So we taken out all the higher lows or lower lows, sort of like a consolidation, and showed us a really, really good, sweet, delicious upward movement. And it showed us pullback, consolidation, and yeah, it's not a market shift, but we can say it's sort of like a market shift, internal market shift. Yeah, that's the word. What I was. That's what I was looking for. Yes, sir. We we get another liquidity sweep because this lower high swept all these liquidities available and showed us a breakout structure which led us which led us to a really good pullback and V-shaped reaction. Like I said, what V-shaped reaction means, liquidity sweep. Easy, right? So, all right. And then price is still going up. And we have like equal lows. What do you call it? Double lower highs. So there's also liquidity sweep, liquidity available. And what the price is going to do is, if the price respects, let me see if it's respected or not. I don't really know whether if it's respected or not, this level, but all I know is on our forward swing range, what we have, we are we are we have already gone through our 70% range, which which shows us pullback to the downside to grab the available liquidity format around here, getting respected from either of these demand zones to go to make the price go straight up. And what I've drawn here is they are sort of useless because they are, in fact, we don't need any of them on 15-minute time frame. All right, this is actually a really good move because on 15-minute time frame, what do we have here? Our 1 hour time frame, we have a really good, really strong bullish structure because it's respecting the all the demand zones. And if you cannot draw a demand zone, you can actually take take this where take if you take this from the high to the low of the movement, you can actually get what? Alright, anyways, it's not working on this structure though, but I will teach you later on this video. Alright, so we are going to sort of respect this demand zone, but I don't really know if it's going to respect or not, or go straight down. So therefore, I'm not going to enter making foolish mistakes like I did on gold and what euro USD. So anyway, price is not going to fool us. So what we are going to do is on our 4 hour time frame, we peacefully wait the price go either one of these one of four of these key levels and to get respected, and we'll enter the trade. All right, so our weekly analysis is bullish, but we are on pullback on GBP JPY. So this is GBP USD. This is my trade that I've taken recently, I guess, where I've lost, obviously, because I put my sell limits, buy limits right around here and waited the price get respected, but it didn't because, again, the same mistake, forcing a trade or not waiting for the liquidity sweep, because if you cannot identify the liquidity, you are the liquidity. All good old quote. So we'll talk about our mistake later, but overall, what we have on our daily time frame is bullish market structure, bullish, 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 lower, lower high, lower high, lower high, lower high, and little pullback, higher low, higher high, higher low, higher high, higher low, higher highs. So like higher low is there are these demand zones. So on our 4 hour range, we don't actually have any 4 hour range because we're only going upwards. This is our last higher high. So yeah, this is our swing structure, and we mark it out our 4 hour key point of interest, key levels, you name it. There is a market shift, V-shaped reaction. So there is a really good manipulation because after V-shaped reaction, price had to go down and get respected from the liquidity candle. Is it a liquidity candle? No, I don't think so. It's not actually actual liquidity sweep, The reason why, because they're on exactly the same price. I didn't notice it. Oh, yeah, surprisingly they are on exact same price, so there's no any liquidity sweep. So just show the a little pullback, or maybe you may call it liquidity sweep, but it didn't respect our liquidity candle. If it was the liquidity sweep, it the price should have come here and get respected. So yeah, we have a really good bullish bearish momentum here, respecting all the supply zones and showing our market shift. This called manipulation. You don't understand how where the price is going, because you see price is going straight down and get respected, but you're wrong. Price is getting manipulated by big hedge funds because there is a liquidity sweep, V-shaped reaction. So it's going straight up. What do we have? We have a market shift, which is our flip zone, because we're looking for, we were marking out demand zones, and the supply zones flip the demand zones because of this market shift. So teach you a little bit of lesson here. You mark out the last candlestick from from wicks, from high and low the wicks of the candlestick, and weigh the price, and mark out the last week that led to a really good, really big movement, and wait for the price to come back down for the continuation. So yeah, this is our flip plus demand zone, right? And what price it? Price spike up to respect this demand zone and went straight back, which is very bad. So yeah, from that moment on, this is manipulation. I had already written down, and price what price did. Price manipulated to the downside straight aggressively. So we mark it out unmitigated supply zones, which we need to, because of this. Where market shift, yeah, this is a market shift. This is our market shift. Market shift, right after market shift, we got sort of like I said, when we have liquidity, so we have dodgy small candles and V-shaped reaction. And since we're on a downtrend, bearish, we look for supply zones to get filled. So yeah, this is our supply zone, and that respected and went straight down again. And what do we have here? We have, we mark out the last candlestick that led to this breakup structure, and price went up and respect this level also. So yeah, it's mitigated, and we went right back up, back down, not up, back down, straight. And what did we do? We sweep all the liquidity and showed a really good market share because of this V-shaped reaction and small candles, which shows us liquidity sweep. So Yeah, we have our um higher low, higher low, higher high, higher high, higher low. So we are in a bullish scenario from this moment on because of this market shift. Right after market shift, pay attention, guys. Right after market shift, we go back to the lower time frame and we'll mark out. Yeah, this is our market shift. We'll mark out the lows, demand zones. Yeah, this is the respective demand zone. Price come back and go straight up to the next supply zone, which is a really good profit. Yeah, I'll draw you. This is the last candlestick that led to this moment and this and the price came back and respect this price and go straight up to our recent supply zone, which is where which is right around here, right? It respected. So if we would have entered here, we could have made a really good profit. 1 to 5.5 is the reward, which is not bad. Which is really good. So this is how it works. And price went down, swept all the liquidity. Swept, oh my god, swept all the liquidity. And right after sweeping the liquidity, what we have here, we have our candlestick that led to the liquidity sweep. It respected our candlestick and go straight up. Plus, again, taking all the liquidities like pen pendant orders below these lows with this candle, with this long wick candle. And what price did? Price went straight up. Breakout structure, we saw breakout structure which shows us we broke the structure. We no longer have any buyers, strong buyers left in the market. So we are going to pull back, man. The market said like this. So what did we do? We pulled back as always. And market the candlestick went straight down. We didn't have any respected key point of interests except for this consolidation. So we marked our last high, which is our demand zone. And what price did? Price went right up. It's actually a news release, and therefore it left a really good up bullish candlestick, and it went straight down, respecting this demand zone and two demand zones right after. And I thought it's gonna respect the third demand zone, and I entered with lower time frame to make sure I really have a key sniper entry, but I was absolutely wrong because I didn't respect my key level as obvious. So that happens because market is irregular, like inconsistent. You cannot really predict where the market is going, even you have a really strong analysis, because we analyze it all of the time frames. We have we have about daily, 4 hour, 1 hour, 15 minute, 5 minute. Even I analyzed 1 minute time frame and I entered the trade and I lost it. So yeah, that's pretty much it. I didn't make any major mistake. I think so because on my book it should actually respect this level because I saw sort of like a liquidity so right around here, swept liquidity sharp reaction and went down and respect this liquidity zone. So it didn't. All right. I didn't make any sort of mistake. Stand by my I stand by my trading plan, so it's okay. All right. But what about Euro Canada? What do we have here? I'm actually in profit in this trade. On this trade, I'm actually in profit on this trade, right? Yeah. On our daily time frame, what we have? Bullish, strong bullish scenario. Liquidity. We saw sort of some sort of liquidity right around here because price showed us doji small candles, and we have our market shift. And when we go down 4 hour time frame, we can really see liquidity sweep, obvious liquidity sweep. You can tell the distraction. V shape, V shape, motherfucking V shape. All right, and we marked out our key point of interests, and we have marked out our liquidity sweep because every highs and lows there is pending orders which which are actually liquidities. There is available liquidities, highs, above highs and below lows. Yeah, that's a really good explanation. Let me write to you guys so you can actually understand what is coming out of my mouth. All right, liquidity sweep, which means there are available pending orders above highs and below lows. So what you look for is every above every high there is liquidity, below every low there is liquidity. So yeah, there is also liquidity, liquidity. You can notice, and what price does sweep the available liquidity to get the momentum to go either way up, either ways up or down. All right, you get it. This is the crash course of liquidity sweeps. So when you see liquidity sweep, you should first see the ship reaction, second small small candles or candles with long wicks. So yeah, And what we have like a perfect nice entry right here because we saw a really good market shift, which means price is going to go down to grab liquidity. All right. So to get the momentum. So we get the momentum here respecting this demand zone because we have a really good breakout structure and mitigating and respecting all these demands. So yeah, or yeah, 100% we're respecting all the demand zones. And what we have here, we didn't wait the price to get here, but here, what did I say? If you're marking out supply and demand zones, what you look for is you actually mark out uh, candlestick from uh, from from the beginning and the end week, like full week candlestick, full week one candlestick before a large move happens. All right, you get it? Mark full week candlestick before a large move happens. Either either up or bouncing. All right. So yeah, we have exactly this reaction. So I marked out the last candlestick from up and down week. What do you call this? Whatever. You get the point though. So we respect it with market shift. Market shift obviously means we were in a downtrend, so we closed our market structure making higher highs, not high, lower highs. We made higher highs instead of lower highs, so we had a market shift. So we moved from bearish to bullish, which means we are looking for demand zones to get respect instead of supply zones. We only use supply zones to mark out our TP, take profit. So yeah, this is our take profit on the edge of the zone. There is actually a liquidity sweep. Price comes here, serves all the liquidity available because there is pending a very large orders because there is not only 2 weeks but also three, 1, 2, 3, 4 weeks. So there is a really good amount of liquidity that needs to be swept. So yeah, that's pretty much it. And what do we look? What is the next chart? It's our Euro JPY. We won this trade. I'm very happy about that. The reason why is the same freaking reason. I taught you on Euro Canada, and I'm going to teach you again on Euro JPY. My sniper entries without any fear, without any FOMO, anything, any emotions, just straight TP. All right, TP. Boom. You see this? On our daily time frame, what we have our really good bullish structure. We don't have any bearish structure because we are only forming higher highs and higher lows with a little bit of pullback. Maybe seems serious, but it doesn't because it doesn't close under our higher lows. If it does, it should have gone down straight instead of going up. Yeah, you get the point. Where we're in a bullish structure. So on our forward time frame, what do we have? We have our bullish structure. What the heck? Structure. Yeah, structure. So we'll mark it our demand zones because we are on a bullish structure. So we don't really need to mark out our supply zones. Supply zones are only needed for our more for to mark out our TP. So we're looking for a point of interest, perfect entry point. So we're looking for demand zones mainly. So what do we have here? Demand zone. What do we have here? Demand zone. This is the last candle before a large move. This is the last candle before a large move. This is also the last candle before a large move. Because why didn't mark out? Because we we in fact get respected from this bearish candlestick. Therefore, I didn't mark it out because it's already mitigated. This is the same. This isn't because this is the last candle and the small candle before the large move happened. So yeah, same thing. So what do we have here? We have pending orders available, higher lows. So we have a liquidity sweep right around here. We go down over 1 hour time frame, we can actually see what happened. This really good looking liquidities because very small candles and consolidation plus. So if you see any consolidation um, above and below consolidation, there is a really good chance to for the price to sweep the available liquidity and go uh, yeah, sweep either way out, up or down, go its own way. I mean the price. So you didn't understand what I said. If you see any consolidation, you you have to price have to sweep the available liquidity either highs of the consolidation or lows of the consolidation and starts the real move after consolidation. Yeah, get the point, right? You know the drill. So what we have swept liquidity and all the demand zones, strong demand zones, because all of our demand zones are getting respected. Like here, because they are swept this demand zone respected. Price came here and go right up, which means we have to um, go to our lower time frame, 15 minutes. So on our 15-minute time frame, we mark out our 15-minute swing structure. So on our swing structure, we are bullish, obviously. So we are going to mark out our only demand zones. So a really strong demand zones right here. There is unmitigated demand zone. I'm going to delete every mitigated demand zone. This is the mitigated demand zone. I'm going to make it more precise. Sorry. This and this. This is the mitigated demand zone, I think. Yep. Yeah. The last one is better. Yeah. This is our mitigated demand zone. I'm going to delete it. So we have a clear chart. So this is our also the mitigated demand zone. I'm going to delete it. So this is my entry point. This was my entry point. I have the really good perfect entry here. because I market out demand zone that actually mitigated because, like I said before that, I was telling you this is all the mitigated demand zones, so it should mitigate the next month because the price is going really strong, bullish, so there's a very high chance of mitigating the next demand zone. This is what happened right here. Mitigated demand zone, so the next demand zone got mitigated, leading to a really large movement to happen and sweeping all the liquidity above our swing range. So what you have here is our market shift, not market shift, so movement after liquidity. So what happens? It's not going to go up because we sweep a lot of liquidity. So buyers get out of the market. There is only there is mostly sellers. So to continue this movement, we have to go back to here and respect, and we'll see if the price is going to go straight down to our TP or not, because there is a very high likelihood for the price to go down. No, I'm going to put myself above this highs because there is no liquidity. So yeah, here we have like for like almost 1 to 5 risk reward. There is 1 to 6 risk reward. That's really good. Decent amount. We can actually cover our all losses today because of this single trade I've taken. So yeah, I'm going to wait the price to go up and straight continue the our downward bearish trend. So I think there is an internal market shift. There is an internal market shift. Yeah, there is. So yeah, that's pretty much it. Bitcoin. Alrighty. Get ready because I have actually the screenshot of that. Let me show you if you don't mind. Whether if you mind or not, I don't care really. On my Telegram channel, you can actually find out. This is our closed group chat. Yeah, Bitcoin I entered 9 90, 90 95K 95K. You see that shit? You see that? What price did? Price went straight down. That's a proof. That's a proof of my strategy and my knowledge in trading. You see that? You see that shit? I know I'm all right. Yeah. Let's let me show you how I took this trade. So like always, I move it to the higher time frame, which is daily, and I look at a daily time frame, and I saw so really obviously a really good market shift with liquidity sweep. No liquidity sweep, but market shift. All right, just a market shift here. And what market shift tells us? This is a shift in structure, so we are totally bullish, not bearish. So we have to look for yeah, we have to look for supplies instead of demands, which makes us selling. All right. On our forward time frame, I after market structure, I mark out my supply zones available. Like I said, they're all of them are unmitigated. So I waited for them to get mitigated, and I couldn't wait because I saw none of these didn't mitigate. So I I thought it's not going to mitigate also. Therefore, I have to go down to a lower time frame. What I saw in a lower time frame is mitigating price range. So they are all mitigated supply zones, and I found one that is mitigated. The price was around here when I found it, and I was like, "Dang, great catch!" So I marked out all of them, and I entered on a 15-minute, not 15-minute, 1 hour time frame, which looked ideal for me because 15 minutes there were a lot of noise. Like look at that, went down, went up, looks like a market shift, and you see, oh, this is a market shift we got to look for. Demand zones, and you mark out your demand zones. So what happens? You lose a trade. So 1 hour time frame looked really beautiful and easy. So I took the trade on a 1 hour time frame, marking out all, marking out supply zones according to the higher time frame alignment. Because when you are taking trades, you guys have to mark out your key levels from higher time frame to the lower time frame. You have to identify what's your daily bias. After you have identified your daily bias, you have to identify your 4 hour 4 hour bias and 1 hour, 15 minutes. And on around 15-minute and 5 minute time frame, you identify your entry levels after the price reaching your one of your 1 hour or 4 hour key zones. So you make a concise and precise entry, I mean sniper entry, and you get into trade. So what happened after that? You win the trade, right? It's easy. Easy peasy lemon squeezy, right? All right, we are done with this. We are actually not, we are in fact in profit because I've lost one, two, three, four trades in a row, and I win two of them with overall 12, 1 to 12 is reward, which makes me in profit. I hope you like my video, guys. I appreciate if you comment what I've done wrong and what I could improve because it's my obviously first video. So, yeah, if you like the video, click the like button and subscribe to the channel to see me with even more videos in the future. So, goodbye for now and wait for day 2. Peace out.